The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone. How are you doing? Welcome back. This is Neil Green again with you on the weekly webinar. I see some familiar names here, which is it makes me happy. Okay, and thank you for your emails during the week. Can see some new names here as well. So welcome, guys. If this is your first webinar, I would like to welcome you to our webinars. This is a free service that we give you as our customers. Take place every Wednesday, same time, which is now 3 o'clock GMT time. So just make sure, it's the same time every time, so just make sure where you're from. If it's 3 o'clock, 4 o'clock, 5 o'clock, what's your local time? And actually, we're going to talk through the webinar about the events, always on GMT time, since we have customers from all over the world. And we would like you to get the right, the right time set. So I'm going to talk in GMT terms just for you to know. So every Wednesday, we have the webinar talking about the events, the important events in the market of the same week, starting at 3 o'clock GMT time, which is now. And we're going to talk about half an hour, 40 minutes, 20 minutes, depends on you, on today's event, which is a great event in the market right now. We're doing the earnings season. I talked about it on past webinars. This is not the subject today. But before I start, I want to give a minute or two for all the customers to attend. You have a chat window, okay? If you have any questions, anything you would like me to clarify during the webinar, you're more than welcome to write me down. I'll do my best to try to answer all your questions, of course, in between during the webinar. And I'm going to leave some time for a Q&A session, all right? Questions and answers at the end of the webinar. I'll try to talk slow and clear. And just a technical check, so everybody can see the screen and hear my voice. Just write down yes or something on the chat window that I know that everything's fine. If there's anyone that has any technical problem, let me know now. This is the time. Okay. Okay, welcome, guys. Great, so everybody sees the homepage of our website, right? itrader.com. And guys, you're welcome, right? You can write it down. Every Wednesday, you're going to have a link right here. You see for the webinar. You have it on the homepage, but just to show you, every week, if you want to register, it's for free. Just put down your first and last name and your email address. Today, we're going to take about the rate decision. It's going to take place actually in about 4 hours, and the NFP on Friday. Every week, all right, you're going to have here the schedule, and of course, you can register to all the webinars every Wednesday, all right? You have it on the homepage as well, which is down here. Join our webinar every Wednesday, 3 p.m. GMT time. And you're more than welcome to listen to me, all right? My name is Neil Green. Welcome back, all of you guys that were here on past webinars. And welcome, you guys. What we're going to do today is we're going to talk about two major events that are going to take place. One of them is going to take place today, and the other one will take place this coming Friday, that affect the U.S. economy, the strongest economy in the world, strongly. And we're going to talk about, it might give us a lot of trading opportunities. I'm going to talk about what's going on in the market in general. Of course, after the end of the webinar, you're more than welcome. I even recommend you to contact by email or by phone your account managers and keep talking to them. And of course, you can email me during the week, and we're going to leave some time for questions at the end of the webinar. So welcome again, and if you're ready, let's start. Okay. Let's get to business, as we say. All right. iTrader.com rate decision. All right. Interest rate decision is going to take place today in the United States, and the NFP. Probably most of you know what is the NFP. If not, no worries. All right. We're going to talk about it today. I'm going to explain you, and I'm going to show you step by step how the market, what's going on in the market right now. Okay. We're going to take a look at the bigger picture, and then try to go deeper into the market. And I'm going to talk to you about, we're going to look at the history of the market, what happened before on previous events, and so on and so on. So let's start with the rate decision, right? The Federal Reserve, which the Fed, I don't know if you know, the Federal Reserve is the central bank of America, of United States of America. Who knows who's the head of the Fed? You know who's sitting at the head of the Fed? There are 16 members. You know the name of the head of the American Fed, of the American Central Bank? Any of you? Any guesses maybe? All right, her name is Janet Yellen, all right? You can Google her. Janet Yellen, she's the head of the Fed. Every time she gives out a speech, she says something, she makes a decision, monetary policies decision, the market reacts like crazy, and the Fed Reserve rate decision will be released on Wednesday, which is today, at 7 o'clock p.m. GMT time. All right, so it's London time. Make sure you know exactly what time is it, where you're from, and don't miss it out. Now, the market is not expecting the Fed to change its rate in this upcoming decision, okay? Which means we expect, it doesn't say that it's going to really happen. What we expect, the forecast, is that the interest rate in the United States will stay the same. The main reason expectations are low, okay, for a hike, is that there will be no press conference following the event. Okay, usually, okay, let me show you on the next page. In the last two hikes, the Fed held a press conference after 30 minutes after the interest rate decision was declared in the United States. 30 minutes after that, we had a press conference, okay, for about an hour that Janet Yellen spoke. Usually they do it, a press conference after any movement in the interest rate decision, since the Fed, you know, Janet Yellen, she wants to explain exactly what made her or the members, the Fed, come into this decision, what affected them, and what do they think about the market. Now, this way, okay, it managed to push down volatility. All right, instead of the market going like crazy if there's any change in the interest rate, okay, the press conference gave Yellen a chance to explain herself and to explain the central bank and why they decided to do what they did. A surprising hike on Wednesday, okay, it's supposed to say the same, will generate huge trading opportunities. Okay, we're going to talk about it in just a second. The Fed has said it will hike 3 times in 2017. There are 8 decisions every year, 8 interest rate decisions. Half of them, 4 of them have a press conference 30 minutes after, and 4 of them has none, just like the first interest rate decision of 2017, which we're going to have today for February 1st. We had none on January, and on March we're going to have a press conference 30 minutes after. Okay? So 8 rate decision during the year. Where do you find it? You can see it on investing.com or Forex Factory. Okay, this I set the clock for GMT time. You can set it to your time. And as you can see, at 7 p.m. we have the statement and we have the federal funds rate. You see? Now the forecast. Okay, the previous and the forecast. Right now, the interest rate in the United States is 0.75%. Okay, let's take a look at the history of that and see how the market reacted. Now, 0.70. Actually, we had 2 hikes. Okay, of the interest rate decision in the United States, 2 hikes in the last decade. In the last 10 years, we had 2 hikes, or 8 years, sorry, okay? Since the big crisis, as you probably know, we had a big, because of the subprime and so on, I'm not going to go into it, but we had a big crisis in the US market in 2008, okay? The whole year, you know, stock market went down, the dollar got weaker and so on and so on. And then interest rate went all the way down to from around 5.25% all the way down to 0.25%. You see here, this is the history. 2011, 2010, 11, 12, always was 0.25%. The first time was a hike, okay, because the situation got better, was on December 16th of 2015. The interest rate went up from 0.25% to 0.5% in the United States, okay, the strongest economy in the world. And the second time actually took place December, the last of 2016, a month and a half ago, on December 14th. Interest rate went up from 0.5%, as expected, that was the forecast, to 0.75%, okay? Reasons for that. Why actually, there were a few reasons. One of them is we had some good NFPs. I'm going to talk about what the NFP is, the second biggest event in the market, and it's a mirror to what's going on in the US economy. It's the events that affect strongly on the Fed, on the interest rate decision. And let's talk generally what's going on in the market, right? This is the MetaTrader, as you probably know. From January 20th, all right, we have a new president in the United States. If you don't know it, so good morning. His name is Donald Trump. He beat Hillary Clinton on November 9th of 2016, and he's the president since in the past 10 days already, all right? Since 11 days, since January 20th. Now, let's take a look at what happened to the market. Let's take the stock market, for example. Looking at the Dow Jones. Dow Jones is a main index, the oldest index in the United States, representing the 30 companies, the 30 corporations, companies with the highest value in the United States. So instead of trading on one stock, okay, we can trade on the whole index. Joseph says that he's a psycho. Okay, well, that's you know, that's an opinion. I'm not allowed to tell you opinions, but we're not going to go into politics. I just want to show you the effect of him being a president on the market. So during his campaign, he talks about two major things, right? And actually, he's kind of doing what he said. He talks about tax cuts. Okay, cutting taxes for corporations, for companies, for U.S. citizens, which means the Americans are going to have more money available out of the income to spend, to live off. They're going to have more money, which is good for the public. And he talked about some government spending, rebuilding America, and so on. Now, as you can see at the beginning, this is the Dow Jones. At the beginning, you see this tail. This is a daily chart, candlestick daily chart, which means that each candle that you see here represent one day. Of course, a green candle means that the price of the Dow Jones in this case went up, and a red candle would mean exactly the opposite, that the price went down. Okay, you know that, right? Okay. When he was elected, it was a big surprise because the whole world expected Hillary Clinton to be elected. This is November 8th. As you can see, the market went down for 3 hours, and then because of the tax cuts and so on, you know, Republicans usually are better for economy. History proves. And then people started to buy stocks, and the stock market went up. Okay, it just crossed 20,000 like 3-4 days ago. So the market is going up. The US dollar got stronger. And so this is the dollar versus the Japanese yen. You can see these are the elections. It went up. Euro versus the dollar, of course, went down because when the dollar gets stronger, the euro here is the major currency. We're going to see a downtrend on the euro versus the dollar. So pay attention which one of them is the major one and which one is the secondary currency. Of course, when the dollar goes up, you know what's work with an opposite correlation with the US dollar is the gold. Okay, since the elections, gold went down. Now the dollar is getting weaker, so it got stronger, but opposite correlation, right? Exactly between all the currencies, especially the US dollar and gold. Okay, now after he was elected, stock market went up. Okay, inflation, which was the most important thing, was on 2%. That was the goal of the Fed. Inflation was on 2%, which was balanced with the fact that Trump talked about tax cuts and government spending. And it gave the Fed a great opportunity, okay, for a hike to raise interest rate from 0.5% to 0.75% for the second time in this decade, all right? So interest rate went up on, as expected, on December 14th. And actually, the thing was that 30 minutes after that, during the press conference, you know, the market was already priced for 0.75% because this is what we expected. But on the press conference, Yellen said that they expect 3 hikes. We said 2 hikes in 10 years, 3 hikes of the interest rate decision. This is how good it is, the situation in the United States right now. Okay, 3 hikes in 2017. Instead of 2, as it was expected for 2, she said 3. You see, the market reacted already. Let me show you the candle. This is December 14th. This candle, you see this huge green candle right here? This is the dollar versus the Japanese yen again. The dollar got stronger. Euro versus the dollar. Let's go December 14th. It's this one. Dollar got stronger. You see, euro versus dollar goes down. Dollar got stronger. Gold got weaker. Okay, I didn't see it, but I guess. There you go, gold got weaker. It wasn't because the interest rate went up from 0.5% to 0.75 because, you know, we expected already. and the market is based on expectations, as you probably know. But the thing was, on the press conference, Janet Yellen said that they expect 3 hikes in 2017 rather than 2. That this is what all the analysts and we believed. All right. So the stock market, by the way, what do you think happened to the stock market when interest rate goes up? Think about it. Interest rate is actually the price of money. If interest rate goes up, people would prefer to take the money and put it in the bank. No risk. They get a better percentage, right? More interest rate. Okay. US banks are getting stronger because they give out loans and get more money. Okay. And the stock market goes down. Now the stock market didn't go that, it went down just a little bit. If you took a look at the Dow Jones, you see this is December 14th is right here. We had a few green days and then one red day. Stock market went down, but only for the same day because of the interest rate decision on December 14th. And it didn't really, actually it stopped the uptrend. See, right now it stopped because of the last interest rate. So if interest rate goes up, we expect the US dollar to get stronger, gold to get weaker, and the stock market, as you can see on the indices, to get weaker as well, and the opposite, of course. Okay. Back to the PowerPoint. In the last 2 hikes, we said the Fed had a press conference after interest rate went up from 0.25% to 0.5%, and on December 14th of 2016, when it went up from 0.5% to 0.75. This way managed to push down volatility, a surprising high on Wednesday. For example, if today we're going to see 1%, of course it's going to be a surprise, will generate huge trading opportunities, right? You know exactly how to trade it. The Fed has said it will hike 3 times in 2017. There are 8 decisions every year. Now the Fed rate is expected to stay at 0.75%. As we saw, you can go to Forex Factory or investing.com or whatever you like to work with. Forecast 0.75% on 7 p.m. GMT time. We're going to see here under actual, okay, the result itself. Okay, so this is where you find it exactly at the same minute. Great. Okay, higher rate could affect the value of the US dollar, of course. Okay, usually when interest rate goes up, the dollar gets stronger, gold gets weaker, and the indices and stocks are getting weaker. Higher rates could also affect US bank stocks. These stocks, most of them of the US banks are domestic, so they work with a very close correlation with the US dollar. Interest rate goes up is better for the banks, meaning they're going to make more money, okay, and it affects the US stocks strongly, US bank stocks, I'm sorry. Assets to trade include US dollar versus majors, all majors, and US banks. Okay, any questions about the interest rate decision before I start talking about the non-farm payroll, the NFP, explain exactly what it is. The second event is going to take place this Friday. So the interest rate decision will take place in about 4.5 hours from now. Any questions about that? You have the chat window. If there's anything you would like me to clarify, this is the time. Just ask me and I'll try to provide you some answers, even though I think it was pretty easy, right? You're going to see the reaction. If you want to see what happened in the market last time, okay, by hours, let me just show you on the MetaTrader. Let's take a look. And the euro versus dollar goes down, means the dollar gets stronger. 1 hour. This is an hourly chart, which means each candle represents 1 hour. Let's go backwards to December 14th. Interest rate decision was right here. You see right here. And as you can see, for 1 hour, 2 hours, 3, 4, 5, 6 hours, dollar got stronger. Interest rate went up from 0.5% to 0.75%, but the main reason was the 3 hikes expected on 2017 rather than 2. All right. So Joseph asked us, so if there's no change, what is it to expect from the dollar? All right. If there's no change, let me tell you this. I'll just tell you in general, in life, right? No news is good news. Pretty easy, right? No news, I'm not going to tell you what to trade on, how to do it. I'm just telling you no news is good news. Great. Okay, let's go on to the NFP if everything is clear. Back to the NFP. Of course, if interest rate goes up or down, it affects the market strongly, not as expected. Now the NFP. The NFP actually is the non-farm payroll. Non-farm payroll measures the change in the number of new jobs, new payrolls in the US market in the period month, which means it takes place every first Friday of the month. This Friday is going to be the first Friday of February, and we're going to get the results for the period month, which means for January. Okay, actually, how many new jobs are out there in the United States of America? Now, if the number, okay, of course, if we have more people employed, it's better for the US economy. Less, this is the event that affects strongly the interest rate decision. It's going to be on the next one, because the interest rate decision is going to take place today before the NFP this month. So the NFP report will be released on Friday, 1:30 GMT, 1:30 p.m. GMT time. Again, if I go to Forex Factory to the website, I'll go up here. Let's go. This is today. Tomorrow is Thursday, and this is Friday. You have here, you see non-farm employment change, all right? Non-farm payrolls expected to be 170,000 new payrolls in the United States. Now, how do we trade that? Okay, we have two ways to trade it. One is doing it like amateurs. If the NFP is better than expected, go with the dollar. If it's worse, go against. I want to make you professional traders, if you don't mind, right? If you like money. So change to NFP today was very, Joseph says, change of NFP today was very positive. Yes, what you're talking about previous NFP? Because the NFP, no, the interest rate decision today is without the information. Joseph asked, so can I expect Friday also positive? No, it's the opposite. The NFP affects the interest rate, not the opposite. So the interest rate stands by itself, the NFP, because we don't know the results yet. We have to wait until 1:30 p.m. GMT time. So we're going to wait for that, all right? Now, the NFP report will be released, as you saw, on Friday, 1:30 GMT time. The U.S. economy is expected to add 175, I saw right now 170, almost the same, 75,000 new workers. Now, how do we trade like professionals? Let me try to picture you, think about it. You can write it down or think about it and try to understand before we're going to read, before we're going to read everything here. Let me try to explain. In economics, if you ever went to university to learn economics, there was a guy called Phillips, all right? The Phillips curve. Everybody learns about the Phillips curve on the first year as freshmen. Now, the Phillips curve actually talks about the fact that when inflation, for a healthy economy, when inflation goes up, everybody knows what inflation is actually how expensive it is to live in a country. If prices going up, means there's inflation. Okay, the opposite is deflation, which means everything is getting cheaper. Now this is a bad sign for economy, because a part of economy growth, okay, a part of US economy growth, we expect inflation, but not to be too high, because then people make, let's say, the same salary and they have to spend more, everything is more expensive. This is not good for economy. So just like in everything in life, in economy it's the same. We want inflation to go up, but unemployment to go down and balanced, all right? Inflation goes up, okay, right now it's 2%, exactly the goal where the US economy, where the Fed wants it, 2%. This is why they can right now raise interest rates, okay? And they say 3 hikes in 2017, because 2% inflation in the United States was the goal, and this is where we are right now. And unemployment is at the lowest. It was 4.6, right now 4.7%, all right? Which means more than 95% out of the Americans are employed, all right? This is great. The US economy right now is in a great situation, all right? We're talking about full employment. We're talking about new jobs every month. We're talking about inflation at 2%. Now, the Phillips curve talks about the opposite relation, okay, the opposite correlation between inflation. Inflation goes up, unemployment goes down. If it's balanced, it's good sign for economy. Now, going back to the Forex Factory, as you can see, this is the NFP, how many new jobs. we have the unemployment rate. Let's take a look. This is very important on the previous, as you see, once a month, every first Friday of the month, we have all this information coming in from the United States. Last time the forecast was 4.7%. There was the unemployment 4.6, the lowest ever, and you see it went around 5% and lower than that since, what is it, 2015, 2014. You see, from 6% to 5%. Now, unemployment goes down, means more people are employed. It's good sign for economy, but it's right now full employment. Almost more than 95% are employed. Now, if this one stays the same, the forecast for Friday is 4.7%. If this one stays the same, unemployment, and the NFP will be around 170,000 new jobs, 180, 190, 160, 150, it's all the same, you know, it's almost the same. You're going to see the reaction. Usually what we see, first of all, is the reaction to the market for this forecast. And then we have the average hourly earnings, all right, which right now we're supposed to see 0.3% more money that people are making per hour in the United States. Now, why is this important? Okay, and I wrote it down here. When Trump was elected, this, how do you call him, this Joseph, this psycho, okay, it doesn't matter if you like him or not. What matters is what he said and what he's doing. Now, what he said, that he wants America for the Americans, all right? He wants to rebuild America. Look at this. Look what happened after he was elected to rebuild America. You know Caterpillar? They make equipment for builders. Like, you see? Daily chart. This is a daily chart. These are the elections. Bam! He went up. You see a gap up the day after when the market was open. So it affects the market strongly, okay? For both sides, okay? After closing the gates 2 days ago, the stock market went down and the dollar got weaker. So it affects the market. Now, the NFP report, we said, the U.S. economy is expected to add 175,000 new workers. Usually the market reacts first to the NFP itself. If it's lower than that, the dollar gets weaker in the first few minutes. If it's higher, it's getting stronger. And then we want to trade like professionals. We want to take a look at the whole picture and take a look at the whole information coming in from the United States, and to understand if the average hourly earnings number is expected, first of all, as I showed you, to be 0.3%, which means there's a growth. People make 0.3% more per hour. Wage growth is critical, very critical. It's a crucial indicator for economic health, all right? Why? Donald Trump says, now the Americans, I'm going to cut taxes, government spending, okay, less immigrants, more jobs for the Americans, which means we can give out higher salaries, which means you, I'm talking about U.S. citizens, are going to make more money. You're going to have more money available because you're going to get higher salaries and pay less taxes. Okay, we don't know if it's going to happen yet. It just started, but you know, this is what he said. Now, this is the first NFP since Donald Trump is the president. This is a very, very crucial NFP because we want to see if wage growth, you know, is more than expected, 0.3% or less. Unemployment rate expected to stay at 4.7%, all right? Assets to trade will include US dollar, of course, versus major. Good NFP information, data is good for the dollar. And the opposite, gold and silver. Metal commodities, they work with an opposite correlation. US dollar, usually when it goes up, gold goes down, the opposite. And of course, it's going to affect strongly the Dow, the S&P 500, and NASDAQ, which are the main American indices. And good luck, of course. Okay, time for questions. Time for questions. This is the MetaTrader. If you want to ask me anything you would like me to repeat, to clarify, this is the time. It's your time. Just let me know and I'm here to answer your questions. Of course, you're more than welcome to send me emails during the week. I'll try to respond, and contact your account managers. All right, you can take advantage of these events today and on Friday, big events in the United States. Usually the market reacts strongly, affects strongly to these events, and you have a chat window. So if you have questions, just write me down. I want to give you a minute or two to ask questions, try to answer, show you in the market if there's anything you would like me to explain. And of course, as I said at the beginning of the webinar, I'm going to be here every Wednesday at 3 p.m. GMT time talking about the events of the same week. Any of you that don't have any accounts yet, please open accounts with us, all right? We're here to make money, and you're more than welcome. And you guys that have an account with us, you're welcome to join us free. It's a free service every Wednesday talking about the events of the same week. So today we talked about the interest rate decision today and the NFP this coming Friday. Okay, what was the ADP employment change today at, let's take a look at 115. Yes, ADP actually a lot of people say that it's affects, gives us forecast for the NFP. Let's go for today. ADP. There you go. Okay, ADP non-farm employment change, all right? Let me just explain, Joseph, to the rest of us. It actually measures the new payrolls without the government, payrolls, only private sector. Now it was expected to be 160. The forecast was 165,000, and the actual was 246,000 new. Wow, that's a lot. Let's see how the market reacted. 115. Let's see the market. Let's see the reaction. I didn't look at it yet. Oh, this is the ADP here. Wow, the dollar is getting stronger like crazy since then. Okay, there you go. Okay. So went down, yes, so the dollar is getting stronger. Euro versus dollar goes down means dollar is getting stronger because euro is the major currency, right? Here, dollar versus Japanese yen goes up. Depends who's the major one, who's the first one, who's on left and who's on right. So if it goes up, NFP should go up as well. It's kind of, a lot of people say that, it's a mirror to one another because the NFP includes the government jobs and this one doesn't, but you got the answer, I think, right? All right, any more questions, guys? Okay, by the way, we had, as we speak, oil inventories in the United States. Let's see the reaction. Crude oil. Okay, a lot of volatility. All right, guys, so I wish you best of luck. All right, make a lot of money. This is what we're here for. Take advantage of these events, and hopefully to see you here next Wednesday on every webinar. Contact your account managers. Trade. This is what we're here for, and thank you very much for participating. Have a great one. All right. Okay, thank you. Bye-bye.